APRA, ASIC, AUSTRAC, as well as the RBA are all interested in how we're thinking about the space.
Welcome everyone. My name is Danny Armstrong and I'm a partner at SWAccountants&Advisors. Today I'm joined by Howard Silby, Chief Innovation Officer at NAB, to talk about the bank's new stablecoin. Welcome, Howard.
Thanks, Danny. Pleasure to be here.
So when NAB minted its AUDN stablecoin in December last year, it was only the second fiat-backed stablecoin developed by an Australian bank. Can you take us through the key advantages from NAB's perspective?
Yeah, sure, Danny. I'd love to. I think one way to think about stablecoins is they are going to be an essential building block of the new Web3 economy. And we talk a lot about transacting on the blockchain, but at the moment it's a little bit like having, a half donkey and a half electric vehicle. So we hear about trading carbon credits on the blockchain or other applications, but typically at the moment there is no on-chain cash settlement leg for those other applications. So I might exchange my carbon credits on-chain, but then I've got to go back to old-fashioned means of, my money will come to this bank account, perhaps, T+2 days time, particularly if it's an overseas transaction, et cetera, et cetera. So we see the stablecoin as an essential stable cash leg component to those other blockchain applications and obviously a far more stable component than relying on cryptocurrencies for that type of atomic instant settlement.
Of course. So being backed by the Australian dollar, leading on from what you're saying, fiat-backed stablecoins are obviously likely to avoid some of the huge fluctuations we've seen in value with cryptocurrencies. But there's still risk, obviously, particularly around cybersecurity. So how's NAB dealing with that and dealing with the trust issue generally?
Yeah, well, I think that's why these things are taking time to come to market. The technology, with all due apologies to the technologists, is probably not the biggest part of the equation here. It's actually understanding the risk. First of all, allowing it within the bank's risk management framework, which you'll know as a former banker is not straightforward to make these sort of changes. But then also putting the right risks and controls in place. So I think what we've done is we've been quite ambitious because this is on the public blockchain, but at the same time we want to be chain agnostic, and therefore we want to think through, well, what are all the risks that can arise as a result of conducting these transactions on the public blockchain. And then we've identified 10 major groupings of risk, and you've sort of talked about cyber and the possibility that smart contracts could be hacked, or so we've worked, we think, very diligently through all of those issues. We've had our smart contract audited by probably the leading sort of audit firm in terms of smart contracts in the world. So there's a lot to do here before you sort of push the go live button. So we're proud to have obviously minted and then burned stable coins at the end of the 2022 calendar year. But this is a incremental series of steps, and our next step is now to conduct cross-border transactions internally with our stable coins. And we did mint in several currencies. And then obviously start opening up to our clients that have expressed the most demand for this type of service.
And you said chain agnostic in there, so that means, I'm assuming, that you want to be able to perform these transactions on any blockchain.
That would be our goal. Now, obviously, there's an enormous amount of protocols out there. So when I say any blockchain, certainly we're still going to be very selective about what sort of protocols we support and therefore implicitly endorse. But we certainly expect to be operating across a variety of protocols.
So can you take us through the range of sort of use cases and applications that you see the AUDN facilitating, and I guess the expected advantages of using the AUDN?
So I think the obvious advantage that's much talked about is that concept of trusted atomic settlement.
Yeah.
And so, cross-border transactions, cross-border currency, it gets mentioned a lot. Because there are obviously sort of, periods of time where those transactions can't be performed. But we're very interested in transactions like repo, transactions where you've got to post collateral partway through processes that effectively, I think our chairman characterised it very well when we did the first ever presentation to the board, probably 18 months ago plus, on this technology, that it for certain high friction, high value use cases, where we do have a lot of steps in the process.
Yes.
Sort of at the moment, the carbon market is a good example of that. Repo is a good example of that. So these are the sorts of applications where we think that this is a technology that's absolutely worth investigating.
And by repo, you mean sort of bond repurchase
Correct.
agreements
Yep.
that you use
Yep.
in funding and liquidity applications to the bank.
Yep.
Okay.
Totally.
Yep.
Yep.
So I've seen mention in the media about green deposits, and also NAB has a blockchain focus for sort of agri-green loans and I guess broader green loans. What sort of role do you see the AUDN playing in those applications?
Yeah, well, that's probably a little bit further down the road, Danny, but it's sort of interesting to think about that. So at the moment, we are starting to use the blockchain as a trusted record, really, of the credentials that we need to see in our covenants for those green loans.
I see.
So, and you can imagine a future world where, let's say an agri customer is getting all kinds of demands of like, prove your credentials to the supply chain, to the bank, so we're actually partnering with a firm to try and make that process easier, where those credentials can be put on the blockchain. Different parties can see whatever's permissioned by the agri client, and it becomes a trusted record that also supports the covenants we have on our green loans. So then sort of fast forwarding, I guess, to the other side of the balance sheet, obviously there's the potential that we can use the blockchain as well in the stablecoin to perhaps issue green deposits that we know are also supported by genuinely green loans that have been appropriately credentialed.
Yeah.
So we do see that some way in the future, those two things will come together. So it's again like two very different applications of the technology at the moment, but something that we see potentially coming together in the future.
I think what you're saying in the examples you gave is that the different stakeholders in those transactions can potentially access some of that information independently to
Correct.
validate
Absolutely.
for the agri loan customer or for the green deposit customer. For
Absolutely. And so we're all for things that will ultimately make customers' lives easier.
Yeah.
So we see this as a really good technology that could indeed do that.
Yeah, good one. So what other services and use cases, if you cast your mind into the future, do you see?
I do think the ones I've outlined are sort of the obvious ones we will start with, but this is a highly innovative sector.
Of course.
We certainly have minted across multiple currencies. So I think, we're really going to be shaped by our clients. And, we're having great client conversations at the moment with large corporate institutional clients as to where they might see, some very specific use cases for them. So I think the field's fairly wide open, but there are those very obvious use cases, I think, that I've already mentioned that we'll certainly be starting with.
I think that minting across multiple currencies is something that I haven't seen before. And that's obviously really advantageous for multinationals and people who want to do things and get more efficient, I guess, with foreign exchange and
Correct.
cross-border payments.
Yeah.
There's been a strong focus in Australia and, of course, around the world on the need for regulation of digital currencies and assets for the last couple of years, and also an understanding that regulation needs to be right for the future, fit for the future, and not to stifle innovation as it gets going. So I'd like to understand your thoughts around what form you think regulation will take in Australia, and I guess what the sector needs from regulation to help enable the sector.
Yeah. I mean, that's a big topic.
Yeah.
I think what I would say is our dialogue with the regulators has been really constructive. Clearly, APRA, ASIC, AUSTRAC, as well as the RBA are all interested in how we're thinking about the space, and actually, have most recently started undertaking meetings where all four of them are together with us, which obviously is an efficient way of furthering the dialogue. We welcome, I guess, all the steps that we see being taken. Treasury's token mapping exercise is important. We obviously welcome further clarity that gradually emerges. The stablecoin, for example, how will it be treated from a prudential point of view? And some of this is obviously coming from BIS in Switzerland in terms of the rules that they're considering as well, which is super helpful.
Yeah.
I think it's important to note though that some of the high profile sort of disasters that we've seen are not necessarily endemic to this technology, but they're actually a symptom of wider issues of like terrible governance
issues,
of straight out fraud. And I think this is where banks have got an advantage. We're used to understanding the importance of segregating sort of custody and trading and customers' assets, and so I think these are things that we sometimes blame sort of the technology as if it's sort of led us into all of these new dangerous waters. And don't get me wrong, there are some very specific risks that are new that we need to tackle.
Yeah.
But we shouldn't forget that a lot of what's happened is actually just bad corporate governance.
And you have the advantage of very strong brand and excellent corporate governance and risk management procedures around it.
Yeah, and we actually see that as an advantage. As I said earlier, the technology, is a big factor, but I think actually the risk management practices, frameworks, the risk and control, sort of environment that banks have built up is really helpful for this new world.
Yes.
So I think and the other institutions are going to take a long time to actually learn how to put those in place. So, we may be a little slower in getting to the answer, but I think we're getting to the right answers.
Yeah, I agree. I think you've got some natural advantage. So,
yeah.
It's been great to hear about the NAB stablecoin. Thanks very much, Howard.
Thanks, Danny. Pleasure.
Thanks for joining us, everyone. Please stay tuned to our digital channel for more on this topic and others related to the crypto sector shortly.